Okay, cool. Welcome back, everybody, to the Mordeau Mortgage Podcast. This is Jason Thibodeau. I got my co-host with me in Idaho, Matt Morrell. So we have back with us today somebody we started our podcast off with officially, and that's Mary Kate Thomas with, MK, what's the name?
I'll give you $1 million if you get it out.
Coastal Oak Insurance. Gosh. As you can tell, we prepare thoroughly for these podcasts. Anyway, so we did this in, was it January that we started this? I think it was. And, a lot has been happening in the insurance industry. Obviously, if you're trying to buy a home or if you're a homeowner or if you live in an HOA, there's been a lot of challenges lately. So it's been, 4 or 5 months. We wanted to have Mary Kate back on because we wanted to get the latest and greatest. The question at the time back in January was, are things improving? Are things going to get better down the road, rather? And that's what we wanted to check in on. Has anything improved, like as far as the state of California goes? Has anything improved as far as the various carriers coming back to the state, or insurance premiums being improved and the increases being approved by the state of California? Like, lots of moving parts. We'll dive into it all. I'm just curious, what the latest and greatest is. Maybe the answer is nothing's changed, MK, but I'm just curious, if there's anything that has changed, what's relevant to share 5 months later.
Yeah, I mean, I think in simple terms, no, nothing's quite changed. The needle hasn't moved very far, I should say.
Well, and that's a wrap. All right, thanks, guys.
Exactly. There has been small movements happening in the background for a broker or an insurance agent. I think we can see where carriers are trying to come back. It's not that they don't want to be here. They want to make it work. They can make a lot of money here in California. It's just going to take a lot of time and baby steps. And that's truly what's happening right now. So, I think when we talked, I gave a number of maybe a year or 2 years. And that's kind of what I had been saying for a year. As I'm continuing to talk to other brokers and go to these trainings and webinars, those are still the numbers being put out there. And like you said, we did this 5 months ago, and that number is staying where 2 years is still being said as of last week. We're still another 2 years out for things to start looking like there's some sort of normalcy back in the state.
Yeah, and at the end of the day, this has to do with, I think, almost entirely the state of California and how they're handling this. Has any of the carriers been reintroduced to the state of California, or where do we stand with that?
Yeah, I mean, they're trying. So, there's carriers like the monsters like State Farm, right? We all know they're not writing here. We all know they canceled, they're canceling over 72,000 policies this year.
72,000? Yeah.
And half of those are apartment, commercial. The other half are single family homes.
I never heard that. That's huge.
Yeah, it's a big number. And, at the same time, their rating also just changed to a B. Now, depending on who you talk to, some could say that's strategic because they don't want to be writing in the state right now. But regardless, the way you look at it, State Farm, who's known to be the, probably most profitable and have the most money as far as in the insurance industry goes, their ratings,
especially in California.
Yeah, they're writing.
What does that mean, crazy. By the way, rated B? What does that mean?
Financially. So their financial rating is now at a B, which standardly carriers should. Who wants to have their insurance provided by carrier who is not being rated above average, right? An A or over financially, right? That's who's going to be financially responsible should there be a loss.
Who's giving that rating? Is it the state of California, the government, or?
There's different, different avenues of that, but truly it's the financial accredited rating. So you're looking at it. If you look at the bottom of every web, you go on and look at a carrier, look at a website, it'll say A+, A, A-, B, and State Farm is now at a B.
Hey, MK, what does a homeowner who's up for renewal and they get a notice that the insurance company is no longer renewing their policy, what does someone do in that situation? How much time do they have? Where do they go to look in this tough environment to shop for a new policy? Do they have to let their lending company or their mortgage company know if they have a loan on the home that it's being switched? Like, what if people are getting a cancellation notice? This hasn't really happened in the past where policies are just dropped, or at least it's been some time if that has happened. What does a homeowner do that's getting that notification?
Get on it right away. A lot of the times you're going to get those notices a good amount ahead of time. Like you'll see that 60 to 90 days before. You're going to get, instead of your renewal packet that you'd get in the mail or in your email, you're going to see a non-renewal or cancellation notice. So whether it's the carrier leaving the state or they're deciding to no longer take your property as a risk, you'll see it come over as a non-renewal or cancellation. And a lot of people say, oh, well, I'm not, they get the notice in April, but it's not due until June. They think, okay, I can push that off. But that's where the problem starts, because there's so few carriers writing. It's just something to jump on. So the first thing to do, call your broker. If you are working with a broker already, call them. They have access to other carriers. If you aren't working with a broker and you're working with a captive carrier, meaning they only, like a State Farm or a Farmers or Allstate, you get on the phone with a broker and just say, hey, I'm getting canceled. What are my options? And that's where we as brokers are fortunate enough to be writing with the few carriers that are left in the state. So that's where we come in to help. And as far as your question regarding the lender, they're going to get a notice that your policy is canceling too. Because they're listed on your policy, they're getting a notice. So if I get a call from someone, your policy's canceling or getting non-renewed, I'm going to ask if you have a loan on the home. When we bind that new policy, I'm getting that information, and we're going to send out a copy of that policy to your lender before they even hopefully have to come around to you to say, hey, who's your new insurance with, right? We're hopefully getting that done ahead of time. Or when you first get that notice, stops all of that.
Something to volunteer on that topic.
Big value.
Go ahead, Matt.
Yeah, that's a big value add in my experience, because, I just had this happen to me, quite frankly, is my insurance changed and they did not send it. My broker or insurance agent did not send it to my mortgage company. I'm busy running a mortgage branch, got a family at home, wasn't paying attention to email. It didn't get sent to my mortgage company. All of a sudden, I've got insurance in place that was forced on me from my mortgage company. Even though I had insurance, the communication didn't happen. And now I'm paying for the policy that my insurance company forced on me. So that can cause, some headaches if you're not paying attention to that. And if your mortgage broker is not helping you get that to the mortgage company, so they know you've got new insurance in place. So that's cool that you guys do that.
Yeah. And who wants to all of a sudden see your mortgage statement come up, and if you missed the notices before, and all of a sudden you're paying, up to $1,000 more a month because all of a sudden you have to use their forced place insurance, right? You're going to see that tacked on really quick. And just because you mentioned that, forced placed insurance is not proper coverage. That's coverage so that your lender gets paid should something happen to the home, right? Because they're the ones invested in it. Should someone get hurt on your property, your belongings are lost, that forced placed insurance is not going to cover you. So a lot of the people, maybe money's not an issue for people, and it's not even about the premium. Okay, great, my mortgage company got forced placed insurance and that's what I have. But the other thing to realize is that's not a proper policy to have in place either. That's
MK, just to make sure people are clear, because this is happening a lot. I'm getting a lot of emails from my clients and calls from my clients where they get this notification from their servicer saying, hey, we need updated insurance, or we're going to do the forced insurance on you. When they change policies, because inevitably what's happening is people are getting dropped by the State Farms of the world and they're getting new policies. Whose responsibility is it specifically? Is it the homeowner, or is it the broker? Is it a combination of both that's actually supposed to be intentional about reaching out to the servicing company for your mortgage and telling them to update the insurance. Like at the end of the day, I'm assuming it's the homeowner's responsibility, but I would tell you 99 out of 100 homeowners, if they're not in the mortgage business, will not think to themselves, oh, I got to update the mortgage insurance info with my mortgage servicer. No one thinks that or knows that. So Can you explain?
Yeah, you said it exactly right. It's absolutely the homeowner's responsibility at the end of the day to make sure that your loan servicer knows that you have a policy in place, whether it be new, whether it be like the renewal came up and perhaps they didn't get the renewal because, as you guys know, when you buy a home, you're working with one lender and then that loan gets sold. So now there's a different servicer. So perhaps they didn't get the renewal because there was miscommunication at that time. So as a homeowner, you have lots of responsibilities as a homeowner. One of them needs to be that your mortgage company or loan servicer knows what your policy is. Now, am I going to do everything in my power to help with that? 100%. But at the end of the day, that's your responsibility as a homeowner to make sure that they have your up-to-date policy.
In other words, you're probably going to remind them that they need to update their mortgage servicer. I have a feeling that a lot of insurance agents don't potentially remind their homeowners to do that.
There's different, they get notice, they'll get notice after notice after notice until that forced place is put. So it is the responsibility of the homeowner. They get mailed, emailed from their loan servicer. So
a lot of people are confused, by the way. They don't know what that even means. They're like ignoring it. They think it's junk mail.
For me, I'll get a text like, hey, I got this in the mail. Great. That's all I need. If you get a text saying someone doesn't have your up-to-date insurance, or I'm sorry, you get a notice saying that they don't have your up-to-date insurance, like for most of my clients, they'll, there's a resource too to help. If someone has a question, like just ask. We don't ignore things. Just call up whoever it is and ask the question. I can get that information to the loan servicer just as easy as the homeowner can. So it depends on who you're working with, but
the other bummer is if people do fall asleep at the wheel on this, you know what else happens if they have an impound account? Their impounds change. I've seen a couple times where my clients are, asleep at the wheel and not dealing with it. The forced insurance gets put in place, and then they get the notification their impound account monthly contribution has to increase to address the new premium amount. And it is what a disaster to have to unwind and fix all of this stuff, right? Because it's not just now one problem; it's two.
Yeah, 100%, and that happens regardless when you're switching. Go ahead.
I don't have an impound account, and my servicer emailed me and said your impound account you have to pay more every month to make up for the enforced insurance policy. It really can create some headaches. So if you get those notes, I know we've spent some time on this at this point, but you want to make sure that you're getting the new insurance information over to your lender as soon as possible. I'm in the business and this happened to me.
Exactly. It can be very easy to be overlooked. And like you said, it's an issue that most homeowners up until recently haven't had to deal with. So it's not top of mind, but it should be.
Is it safe to assume, MK, when these cancellations are happening, that the renewal is going to come at a greater cost than what they were at prior, like regardless of who they put the new insurance with? Is that like a safe assumption?
Yeah, insurance, because part of everything going on with the insurance industry, a lot of it had to do with those premiums not being where they needed to be able to afford to stay in the state, right? So absolutely, these increased approvals in California, in order to increase your premiums, carriers have to get approval from the insurance commissioner's office. So those are finally starting to get approved, right? That's why we're saying that 2-year number, because it's going to take a bit to catch up. But to your point, as they're getting approved now, they've had a policy for the last 3 years with one carrier. You might see slight increases every year. Now jumping to a new carrier, you're probably going to a carrier who's gotten those rate increases approved. And if they're still writing in the state, you bet you're going to notice that in the premium. You know what I mean? Like there's a reason they're still writing here. Doesn't mean it's going to be exponentially bigger, but there's definitely going to be an increase for sure. I've not been in a situation the past 2 years where I'm switching someone because of a non-renewal or cancellation notice where we're actually end up saving that money.
Yeah.
MK, do you notice any or I shouldn't say notice, but do you have any tips for homeowners that would allow them to save on their homeowners insurance premium. Addressing what's an appropriate deductible, all the different layers of insurance. Is there such a thing as being overinsured, right? Like when you're having a basic consultation and people are feeling the pinch financially, are there any low-hanging fruit recommendations that you would have for them on stuff like that?
Yeah, I mean, deductibles a great place to start if you're really looking for savings. Like on a single family home, there's no reason for your deductible to be lower than $2,500. A lot of the people hear like $1,000. In California, let me speak to California specifically. In other states where it might cost a little bit less to do things, a lower deductible might be appropriate. But in California, $2,500 is where I start. And then from there, a more expensive home to rebuild could absolutely go higher in deductible. Bundles used to be really the biggest way to get savings. Unless you kind of fit in this perfect box for some carriers, bundles are pretty far and few between right now. I mean,
oh really? Yeah, bundle was the thing to do back in the day.
Yeah, I mean,
and when you say bundle, just to make sure people understand, bundle means like you are, your auto insurance, your home,
umbrella.
Those are the two big ones, and the umbrella.
Yeah, home and auto is the biggest. Any other proper investment properties you might own, an umbrella policy, all being with the same carrier, or where the most discounts are. Now, if you can still get that is absolutely still the best way to get savings. My point being, you're in the market to buy a home right now. You're probably not going to be going the bundle route. That's just the fact of it. Not to say that it's not out there. It's just the majority of the time, it's not something to count on anymore. I get a lot of people now like, I want to shop everything. And, out of integrity, it's absolutely, I'm going to look at it. But 80% of the time I'm saying, hey, keep your auto and that second home where it's at, this new purchase we're going to put here. And I have to turn the business away because I'm not giving them savings.
Before I forget,
I think that'll turn around.
Before I forget, can we talk about condos real quick? Fannie Mae. So in our mortgage world, we had an update come through from Fannie Mae requiring, I might botch this, but requiring replacement cost estimator for condos. And the initial feedback that I got from our underwriting team was, well, that's not a thing in the world of condominiums. And I don't want to assume that everybody knows what this lingo means. Can you help us understand what replacement cost is in insurance, and maybe address what you may or may not know about the condo aspect when it comes to Fannie and their new announcement?
Yeah. So when you get an insurance policy, when I'm quoting it, I'm quoting that at replacement cost versus cash value, right? So
what does that mean? I don't even know what that means.
Value. So if you look at it like, look at a TV for an example. If you have a 5-year-old TV and that TV gets lost in a fire, you're at replacement cost, you're going to get a TV replaced to replace where we are now as far as like TVs and things go. Whereas actual
you're going to get a better
value,
TV.
Yeah, cash value is like we're going to find a 5-year-old TV that is older and, not up to standard, that kind of thing. So replacement cost for a home, let's use a fire, for example, there's a loss, right? It takes into building materials into account, like you're using things that are going to bring your home to the standard where it was, if not better, versus like, oh, we're piecing things together using older material. That's that cash value. You're getting less. Now there's some
can you address that with regarding to condos? Like, how does this?
Condos that's the verbiage replacement cost estimator, or RCE, is simply that. It's an estimator for us to determine how much it's going to cost to rebuild the home should a total loss happen. So on a single family home, we go in, we run the replacement cost estimator report. It tells us how much it's going to cost at replacement cost to rebuild. That's the minimum we're going to insure the property for. So on a condo, when Fannie and Freddie are saying we're now going to require replacement cost estimators on the whole condominium, so common area, there's hundreds of units, there's multiple buildings. Those are not, that is not like, I'm not going and getting a whole report that's, 100 plus pages that's telling me every single detail and building material that's in that condo, right? So they really are non-existent to that point. Now, Condos should be getting appraised every few years anyway. Like, I know underwriters will take those full appraisals if they exist. There's also it being in writing as a broker. Should an underwriter say, hey, I need a replacement cost underwriter on for a condo's master policy, so covering the buildings and roofing of these big condominiums.
And just to clarify, we're talking about master policy.
Master, not individual.
Entire condominium complex, as opposed to just the individual unit somebody might be actually buying in the community.
Yeah. And so these are policies that are already in place that the HOAs have. It's not, if you're buying a condo, hopefully you don't have to deal with this side of it, right? This is more the back end of it where your lender and the insurance broker are going to figure that out. But essentially, really, as long as what I'm seeing is underwriters are taking the broker's word for it to an extent where in writing, they need to see, we are guaranteeing that this policy is at 100% replacement cost value at the amount we're insuring it for. So
yeah, so an asteroid hits the building. Hopefully no one was in it. Everyone's on vacation. And the entire complex is leveled. The idea is that would be completely replaced. But how often are we seeing various insurance agencies who are providing this master insurance for an entire HOA, offering that request? Are they able to answer that question?
No,
or
you're not getting what they're asking for. What they're asking for is a non-existent request. What you're getting is a way for an underwriter who's doing the loan to make it acceptable for them to be able to close the loan. So we're doing what we have. They're doing what they have to do. The broker and underwriter are working together to get what they need in order to make it happen. But the actual replacement cost estimator that they're asking for is not a thing that I can go on as if it was like a single family home and say, hey, here's your estimator. Look.
So it doesn't exist is what you're saying. We're just getting an insurance agent to say what they want to hear.
And it's very, but I also will say I understand where Fannie and Freddie, their reasoning for requesting this is because in California, HOA master policies are becoming more and more underinsured because it's costing a lot more to insure that big of property, right? And so then it's following on the residents to part of their HOA dues, and it becomes a whole thing. Or they're in a fire zone, so their policy tripled and the HOA can't afford it, so then they cut the coverage, and we're just in a mess. It's a mess.
Do you see the government stepping in at some point? And I know there's a California FAIR plan here in California, for example. But if the cost to insure from a private company standpoint just becomes impossible at a certain point to have truly adequate coverage, is there any talks from a government standpoint on the federal or state level of the government like providing supplemental insurance on and beyond what a private company can actually provide? Yeah, it sounds like the industry is going insolvent to a certain extent, is what I'm hearing.
Yeah, it's not necessarily that they're coming up with like supplemental. They're working to come up with they're very slowly working with ways to get carriers back in the state so that there's more options is what they're doing. And they're working to get those approvals in. They're working to get more options for people. Really, I mean, even things like Fair Plan, like I can't remember her name, but the California Fair Plan spokesperson just a couple months ago said, we don't have the money. Should everyone lose? Should there be a big fire that wipes through? They are not financially sound right now.
Well, it's just the FDIC, just like the FDIC, right, Matt? Where it's like they don't really actually have the money to bail out a catastrophic situation in the banking system.
Exactly.
At the end of the day, the federal government would just step in and print more money, as they've always done.
And
or the taxpayer would, really.
Yeah.
Yes.
Well, exactly. That's the other side of it. Is the Fair Plan people think is government funded. It's not government funded. It's funded by everyone who's licensed in the state of California to provide insurance. Everyone, it's like a pool, right? So that's the other side of it. It's getting paid for regardless by those carriers. It's just, done in a different way.
Hey, MK, I got kind of a question that might wrap us up here, but I had a client reach out recently, and I know this is becoming more and more common where single family homes are being used for purposes outside of a primary residence or a rental property. So, for example, a sober living home or a nursing, like an elder care home where you've got nurses in the home that are taking care of people. And maybe these are typically bigger homes, maybe 5 bedrooms, and they're renting out individual bedrooms. And in my experience, a typical renter's policy or owner's policy is not going to be proper coverage.
Correct.
Do you guys insure properties like this? And if so, what kind of coverage should the consumer be inquiring about to make sure that they have the proper insurance in place in case something were to happen?
It really just flips to a business or commercial policy at that point. If you're running a business out of that structure, there's no reason that there should be a homeowner, right? A standard homeowner's policy on that, because they will not cover that. I see people all the time try to get away with it. Like, oh, we're just buying it. And that's that. Should a claim happen and that insurance carrier finds out that that was what the home was being used for, you have no insurance in place.
Yeah. Wow. So that's a commercial policy at that point.
Yeah. If there's a business being run, they need to have a business policy.
But can you get in a business commercial policy for a property that's in a residential zone?
Mm-hmm. Yeah, you do it all the time. There's like mixed use buildings too, right? You can look at it like that. Like if they are using it as their primary in addition to running a business, there's different ways to look at it. But yes, it's possible to get the proper coverage. It's just not as easy as, your everyday getting a homeowner's policy, which right now isn't easy anyway. So it doesn't matter.
Okay. Any, just in wrap up mode, any advice for homeowners on the home hunt right now dealing with this fiasco? Because I've noticed, like, for as long as I've been in the industry, when people are shopping for a home, the last thing on their mind is homeowners insurance. And it's usually something a lot of homeowners aren't even in the first couple of weeks of escrow talking to an insurance agent unless they're being asked to. Like, would you recommend that they get in touch with, like, at what point would you recommend that they get in touch with you? Before, during, or whatever, during the escrow period?
Yeah. I mean, obviously, as soon as you get into escrow, one of the first things you should do is contact and try to get your insurance in place. Now, most lenders and realtors are aware of what's happening in California, and they've been pretty good about telling their clients, right? Like, hey, you're in escrow, and I'm seeing it on both sides, lender and realtors. Like, start getting that going. You need to get your insurance in place. That's great. Now, should you be looking at lots of houses? You don't know what area you're going to be in yet, or you're in a high fare, you're looking in Big Bear for a second home and you're trying to get quotes. Like, I do estimates all the time. So that, like, I like to say, let's keep that conversation open. Hey, I'm getting into escrow, or we're looking to buy a home. And my conversation with that person is, start sending addresses my way, and I'm happy to send you estimates. And for simplicity's, also, insurance costs more and more. That might make or break someone's deal very quickly.
Yeah.
So
that's what I'm thinking about, right? They might be really surprised about what the premium actually costs. I like the tip that you just gave. Like, and it's funny, on the mortgage side, we actually encourage borrowers, when we're done with the pre-approval, what do we tell them, Matt? We tell them, hey, reach out to us if you want us to crunch any numbers on specific properties before you make an offer, right? Mm-hmm. I think it sounds like you're giving the same advice on the insurance side. Yeah,
exactly. Yep. Same thing. And I will also say, if there's any realtors listening that are listing homes, above maybe 3-4 million on the coast where it might be high fire, it might be hard to get insurance, like, give me a call. Let me start giving you estimates, because I've been dealing with a lot of homes falling out of escrow, and these big, beautiful homes that people think it's going to be their dream home. And then they see an insurance premium and decide, never mind, that's actually not going to be the house for us. So you may need to take that into consideration when listing, having that conversation from as they walk in the door to the open house and they're really interested. It needs to be a moving conversation between all parties, for sure.
Yeah. Awesome. Insurance used to be so cheap and an afterthought before COVID. And obviously nowadays it's very different. So, that's why we're doing these podcasts, to try to raise awareness. And that's why we have MK on, just because she's as good as it gets, and she's our go-to and helps our clients. And just from a customer service standpoint, you want somebody who's relationship driven and not, transactional. And talking to you in a call center in a different state who doesn't really care about you or your transaction. So that's why we have Mary Kate on with Coastal Oak Insurance. See, I remembered the name. Aren't you proud of me, MK? I got to keep things interesting on this podcast. Anyway,
it can't be just boring insurance talk all the time.
We appreciate everybody tuning in. We do ask that if you found value in the podcast, please like and subscribe to it. We sure appreciate the viewership and the support, and we'll keep the content coming. Thanks, everybody.
Thanks, MK.
All right, thanks for having me. Bye.